First 4 years that I've been doing this, and it's one of these where every master was once a disaster. I can't tell you what a disaster I was when I initially started trading, but I knew that this was the way to kind of make my money work harder for me, and that was really what I want to do. So my goal with writing this book is to teach people how to take that 10,000 hours and compress it down to about whatever it's going to take you to read a book and then start doing things. And I know that I can teach this so that anyone can invest. So I don't want you to be worried. Your emotions are not going to be involved, because the way I'm going to really show you what to do is to do it without emotions. Because in my mind, the best way to lose money is to close a losing trade in a really good company just because the market happened to go down for whatever reason. So if you look at all the 2008 with the financial crash, I literally lost 50% of my portfolio in my 401k account. And then the market recovered in 1 year, but it then took 3 years for my 401k account to just break even. So now I'm 3 years where I've made no gains at all. And literally, I can show you charts in a little bit later, but what we really want to be able to do is get out when we see things going down. And even if they stop going down and go back up, that's okay. Because if you're in cash, you're basically in a bullish position. You're not going to lose money. So if you get out at 5 or 10%, then if it goes down to 50, now you're in a really, really good position, because now you can kind of pick the bottom and then reinvest, but now you've got all this extra money to reinvest at the bottom. So there's a ton of different things, and all of this will be, collected, but I don't want to go too far today. But so my goal was to really just kind of help you get set up with a trading account. And Dagmar, I don't know what's available in Germany, but I'm sure there are a lot of online trading accounts. I
have a trading account.
Okay. All right. So can you trade paper, monopoly money?
I don't know, but there are several accounts I could do it. So,
okay.
Yeah.
So just to get started, right? We need to all walk before we can run, or crawl before we walk. Every brokerage account right now, and if you had done this 20 years ago, none of this would be available. So Raki, you're actually in a perfect position to be able to get started. I mean, you've got a huge factor, a huge advantage over me. In, I don't know, 2 months, 3 months, I'm going to be 60. So I need to do things a little differently. You've got age, and you'll be able to compound for many, many years to come. Just work with good companies. Don't touch it. Every time you can invest a little bit more, buy more of that stock when things go down. We can cover things, but good companies, if they have enough cash flow, are actually going to give you a dividend, which is basically saying you as a shareholder. And when I say shareholder, I want you to think I'm an owner of the company. Okay? Because when you buy one share, you don't need to buy millions. You are an owner of that company. I had a great visit with Chipotle. It's another long story, but I actually walked into a Chipotle feeling like an owner. And I looked at everything so much differently when I was an owner of the company. And I ended up having a not so great experience because they didn't have a power outlet for my PC. There was no Wi-Fi, et cetera. I ended up walking down the street to Starbucks, and I wrote customer service at Chipotle and told them, you really need to make Chipotle a destination, just like Starbucks. So you should model Starbucks, because then I would have stayed. I would have gotten my coffee here. I would have ordered more things, et cetera, et cetera. So anyway, it was a lot of fun. But if you invest, you're really an owner of whatever you're going to invest in. And that's a critical differentiator between trading and investing. In summary, every trading account today allows you to do what's called paper trading. And they actually give you $100,000 to actually begin investing. So one of the things we're going to do is just create a trading account and then show you how to place a paper trade so that Monday morning when the market opens, we're going to buy, let's say, I don't know, maybe 50 shares of Apple. And then Monday morning, you're going to now be a part owner of Apple in paper. But if you were to buy one share, it's roughly about $150 right now. Okay. And just as an example of long-term investments, if you had invested in Apple over the last 10 years, your investment would have gone up 980%. So, and trust me, there were a lot of dips and valleys in there, and many people would have gotten out when things really got bad, but that would have been a loss to them. But if they just used the advantage of long-term time, then everything recovered, and now everything's up 980%. So right now, Rocky, it's kind of a landscape mode. So, but if you go to www.thinkorswim.com and just hit enter, then you're going to basically get this screen. And Thinkorswim is an electronic brokerage account. I'm pretty sure, yeah, they use it with TD Ameritrade. And fundamentally, you can open an account and begin to trade paper right away. So you'll see here, practice trading with or without risking a dime. Register here for paper money. And you can also just open a new account. And then once you've done that, you can actually place trades. And I'll show you a little bit of that in a few minutes. But then now you're beginning to trade with paper. So you want to trade with paper for two reasons. The first one, and probably the most important one, is you're not risking your own money. So if you lose $100,000 trading your paper, which the way we're going to do it won't happen, you just reset your account again, and now you've got another $100,000 for paper. So some of the things there are sort of critical, but the other nice thing is that a lot of these brokerage accounts all have different screens, and you need to get used to opening a trade, closing a trade. So you're going to hear things, Racky, like buy to open, sell to close, things like that. And you need to make sure that you're going to hit the right buttons at the right time. Otherwise, you may end up buying more of something that's going down, and you don't want to make those mistakes when you're using real money. So you want to use paper just to practice trades. So you may even just look at a bunch of companies, figure out by looking at the chart, well, this is a good time to buy. I'm going to buy 5 shares, buy 5 shares. Another company, buy 5 more. So you want to get used to that. You almost want to create a muscle memory for trading, just because you don't want to make silly mistakes or stupid mistakes when you're actually working with your real money. So that's some of the things that we'd like to kind of focus on. So I could leave it at that and just show you a few more things, and maybe rather than diving into it too much, since Dagmar, you already have your account, but you can see you can register for paper money here, and you can open a new account here. And then you can just kind of follow through the screens. And if you get into an area where you don't understand something, then just send me a quick message. But one of the things I'd like to do is show you, I have an Apple, and one of the reasons I invest in Apple is because I love their products. I love their vision. I also happen to know that they're now getting into self-driving cars, a lot of augmented reality. So there's all different types of things that are opening up for Apple. And that's going to keep their growth growing year after year after year. And it's not going to be, well, they've grown for the last 10 years, but now they're done. If you don't want to invest in companies that are done growing, because now no one's going to be investing in them, and no one's going to be willing to pay more for the stock than you did unless they think they're going to continue to grow and grow and grow. With Zoom, you can pick to select your iPad or iPhone, and then from the phone, you would actually just up swipe from the bottom, and you see, well, right now it's actually connected to my Zoom, but there's an option to mirror your phone onto the PC. So that's what I'm doing now.
Great, cool.
So the app that I'm looking at, can you see my mouse when I mouse over the screen, or is that not visible? Okay, in the lower right-hand corner, you see the CNBC app. So I'm gonna just hit that key, and then up will pop an application, and I'm sure this is available on any phone. But this is what I use actually to keep an eye on the market. So I can pop up down here on the lower where it says markets. And now I know what the Dow Jones, the S&P, and the NASDAQ. So the Dow Jones is just 300 of the largest corporations in the US. The S&P is kind of 500 of small cap stocks, and the NASDAQ is all tech stocks. So these are the three primary indicators that give me a sense of what the overall market is doing. Not all of them, but enough of them. So if I see my stock go down, but the Dow Jones going up, then I don't panic. If I see my stock go down and all three of them go down, then that's a day that's going to be bad for everybody. But the next day I pay attention to is tomorrow, because 2 days down like that start to signal something. But one panic day because somebody said something somewhere and the whole market reacted to it, I don't get bothered by that anymore. Because typically you'll see things go down by 200 points, but the next day it could be up by 3 and that type of thing. So the different things, just don't panic and let things kind of settle out the way they are. The other thing I like about this is that it's got a bunch of stories here. So this will have, it's basically a news feed. So if I want to read about Elon Musk, with artificial intelligence, various things. So these are great stories to read, just to kind of keep an eye on things, keep things in the front of your mind. And it's, oh yeah, I remember reading that article. So it's just a great way, and maybe it will tie into the companies you're thinking about, maybe it won't. So there's just a number of things like that. And there's a bunch of videos, and these are nice because now you can look at videos, people talking about it. And once you get involved with CNBC and Bloomberg, which are the two that I pay attention to, some of these talking heads, as I call them, I turn them off, because a lot of the times they're just coming out of their mouth are words and words and words, and you could take it either way. And if somebody has a strong opinion about something, then we can move forward, but otherwise, so I've got my favorites that I listen to all the time, and I've got others that I strongly discount what they say. So I can share those a little bit later. But one of the nice things that you can do, in the bottom center, there's a section called watch lists. So if I hit that, you'll see now there's two things at the top. It says market close and extended hours. So this is where the market closed on Friday. And you'll see that this screen has the three markets that I keep an eye on. And the Russell 2000 is kind of an industrial index. But again, just another index that gives me a sense of the market. But then the next few of these are Apple, Chipotle, Tesla, Twitter, and NVIDIA. And those are the companies that I actually invest in. So I can literally, in the middle of my workday, pick up my phone, open this app, glimpse at the market, and I'll say, I'm going to have a really good day, or, well, today's not working out, tomorrow's going to be a better one. So now I can actually look at these. And if I select Apple, for instance, I now get a chart. And if I turn the phone sideways, I don't know if this will work, but yeah, if I turn it sideways, I can now look at the chart over the last day, over the last 5 days, over the last month, the last 3 months, and the last 6 months. And this is about how long I've been in Apple right now. And if you look over on, I guess I've been longer than 6 months. So let me go 1 year. Yeah, so I basically got in Apple back in like October at about 109, I believe. So it must have been a little bit earlier than that. So I've actually been in Apple for quite a while now. And one of the things that you'll learn as you get more and more involved with this is that if the company has extra cash, they end up giving you money in what's referred to as a dividend. So Apple's dividend is 57 cents. So for every share that you own, Apple is actually going to return 57 cents of what you paid for it back to you as a dividend. So over the course of a year, they have 4 dividend payouts. So every year, Apple stock literally cost you $2 less, approximately $2 less. So that's a way to reduce the cost basis for your stock, and that's a different webinar. But so this is kind of nice that I can look at charts very, very quickly. If I scroll down a little bit more, there's the usual obligatory advertisements. But I have the key stats for the day, what the high and the low is, earnings per share. So now all of my fundamental information is here as well. I also know when my next earning date is, and earnings are, again, a different subject. But now I've got things in my news feed relative to Apple and how it might apply to Apple and different returns. So this is just a screen that's filled with wonderful information, and you can use it for companies that you're investing in or companies you're thinking about investing in. And this is available on the web or your phones or anything. So, and the apps are great. So for me, Apple has probably been a 25% return so far. Tesla has been, I got in at about 190, so that one's up there. Twitter was one of we have a different business called Cat's Tongue Towels. I'm sure you haven't heard of it, but we sell a cleaning product worldwide. And with that, we use Twitter actually quite a bit to reach out to our customers and people that we like to communicate with. So I use Twitter all the time. We probably have, I don't know, 1,000 followers on our Twitter account, which is kind of cool, but I just like Twitter. I like the way people use it and things like that. So at one point, it was rumored that Google was going to buy Twitter. And I literally bought, I think it was 100 shares. So at that time, it was probably $2,500. And that next day, the rumors weren't true and the stock dropped like, I think it was 20%. So I ended up losing, I don't know, $500 in one day. But I was determined to use options and do a number of things to lower my cost basis. And actually, as the stock went down, I just used it as an opportunity to buy more. Because every time you buy more at a lower price, if you still think the company is going to continue and be good, then you're lowering your cost per share. So now your break even is that much lower. And it's easier to talk about these with charts, but I'm at the point now where I think I've got 800 shares of Twitter, and we literally just broke even. But now I've broken even, and the best part is I've broken even with 800 shares. So now we're in nothing but a good place. So I was able to get more and more shares at a lower and lower price, and now it's basically recovered. We've got guys like Mark Cuban buying in. So just Twitter, it's not going to be a $500 stock, but it's definitely going to be a profitable trade for me. And in the past 5 years, I easily would have lost a lot of money trying to trade Twitter, because a lot of people will say, if you lose money, get out of it. If you lose money, get out of it. You know, just minimize the damage or your losses. But if you think that the company is good, the only way to lose money is to close a losing trade in a good company. So I don't use stops. I don't protect any of that. I just keep an eye on things. And it's one of those old adages, if you put all your eggs in one basket, make sure you watch the basket. And that's really the way I like to do things now. And trust me, I don't worry about this minute to minute. I mean, I look at things, but more I'm curious. And I'm looking for the next opportunity. I'm not looking to minimize my losses. Do you know what I mean? So that's kind of my change of mindset right now. But anyway, just in summary, get the CNBC app and just start playing around with it. You can add things to your watch list, pick the same companies that I have, because then I'll be able to tell you everything about them. I actually think Amazon and Google are also absolutely outstanding investments. It's just right now, neither one pays dividends. They're also like $1,000 stock. So I can't use them in my cash account, but right now NVIDIA is. It's 164, so I think I've got right now 64 or 65 shares. But at one point, I think I had 94 shares, and I've just been selling them as I make profit. So now I've got 64 shares at $165. I think it's at, whatever it is, 10,000. So I'm literally $250 away from taking another 10%. And you're going to hear that my gold coins hit the floor, because it's going to happen pretty soon. And if you do it the same way, you'll have gold coins hitting your floor as well. So it's just a nice way to look at it, because then if you have a 10% profit, take it. And if you get another 10%, take it, because now you're not running the risk of having something go up by 200% and then quickly drop back to 50. So now you've taken money off the table, and the more you do that, then when it goes up by 200%, you've actually taken a lot of money off the table already. So what do we have here? So I'm going to stop that share and just kind of open it up for general questions, I guess, because I don't want to take up too much of your time. So that's kind of a good summary, but what's changed over my 5 years is my mindset. I consider myself an investor who uses trading to amplify my investments. And that's really been the critical change. Right now, I'm looking at a 35% return on my retirement account. And I have a 5-year plan to be over $1 million. Because then if I can get a 30% return on $1 million, it's $300,000 a year. And I can easily retire on that. So that's kind of the idea. And even if you end up with half of that, then you still want to use investments to be able to do that, but just kind of focus on good companies, then do that. But don't think of it as just investing for retirement. I need to think of it as investing for cash flow as well as retirement. So do you have any questions? Or I think somehow I can probably unmute you all, but.
Yes, hi Tom.
Hi.
So yes, I'm gonna open up that Monopoly or paper account. So you're saying buy shares in the ones that you have, such as Apple, Tesla, which other ones, so that I can start practicing.
Yeah, those are the companies that I use, like on my watch list. It's Apple, Tesla, NVIDIA, Chipotle.
NVIDIA?
NVIDIA, NVDA. So when you're dealing with stocks, they have what's called a ticker symbol. So with Apple, it's APPL. With Tesla, it's TSLA. NVIDIA is NVDA. Chipotle is CMG for whatever reason. What else am I in? Those are the big ones that I have. Oh, and Twitter, TWTR. So those few, that's it. So I don't watch 20 stocks. When I started, I took this course with a guy named Phil Town, and I actually had a bunch of stuff in probably 15 different stocks that I thought were going to go up. And it turns out everything kind of averaged out. So for the first 3 months of this new investing for trading, I was only really gaining like 5%. So I had some that were way up and others that were pulling me back down. So what became clear to me is that I was overly diversified. So I didn't want to do that. So I'm now back into, I've got several companies that I've got the majority of my holdings in. And right now I'm up 35%. And the good news is that I know I can do better. But part of me is letting some of these trades run a little bit, because some of the things I want to put in my book are how to manage your emotions. And I can't really do that without experiencing it myself. So I'm actually letting my portfolio go down a little further than I might like, so that
I can I can volunteer for this. I lost 35,000 in trading with emotions.
Yeah, emotions are going to kill you. But if you just get rid of that, time is your friend, and don't panic when things go down. And if they go down so fast that you can't recover from it, then just ride it out, because over the long term, 6 months or a year, everything is going to come back up. It's done nothing but go up for hundreds of years. And there are times where things sort of slowly drift, the momentum drops away, the buyers disappear, and the market just kind of drifts down. And that's when you can just sort of say, all right, I'm going to take my money out. The summer's, my vacation. I don't want to worry about what's happening with my investments when I'm in, whatever, Jamaica for 2 months vacationing. Then just take your money out of the market and sit in cash, get back in when you feel like it. So it's just kind of have a, not so much a laissez-faire attitude about it, but just be smart, don't panic. And, if you invest in good companies, don't speculate. I have my father-in-law right now. He's literally invested in a company that was a $6 or $7 stock. And I took a look at it, and they had so much debt, it wasn't even funny. And I said, John, this is not going to be good. And it literally dropped down to $1, and it was almost ready to file for bankruptcy. And I talked to him at $5. I talked to him at $4. I talked to him at $3. And he was just sticking with it, sticking with it, sticking with it. And I said, John, if this was a growth company, I'd say, don't worry about it. But they have so much debt, and their free cash flow wouldn't pay off their debt in 10 years. 2 or 3 years is good, because you want to use the bank's money when you can. But 10 years is just like, it suffocates you. It's like having a credit card with a 25% interest payment. All you're going to be doing is paying the interest. You're never going to pay down your debt, so you can't recover. Anyway, he held on to it, and they've split the stock. So every 13 shares he owns, he now owns 1, and it's just a mess. So stick with good companies, and the emotions will be there. And I'll be putting a lot of that stuff in my book too, because that was what really killed me with trading. I lost half of it, but if I had just let it go for another 2 days, it was fine. So, but manage your emotions and invest for the long-term compound. Use your young ages to, you'll do very well. So that's kind of a good summary, but I was hoping we could dive into setting up the account. But if you open your account, at some point you're going to basically say trading or something like that, and type in the symbols like APPL, and then just hit buy and put 100 shares in there. And you're going to be an owner of Apple on Monday morning, virtually an owner of Apple. And then somewhere on there's going to be a funding tab or something like transfers or something like that. And you actually need to link your bank account to your trading account. And then you'll be able to move money in or out of your trading account from your checking or savings. And then you can start trading with real money. But I'd say for the time being, Rocky, just get a trading account set up. Use the monopoly money, because if you spend it all, you can always reset your account and get another 100,000. And that you want to practice, and you don't want to be working with real money just yet. Even if I said, I'm making so much money in the market right now, you can't believe it, stay away. Stay away. Don't, in fact, if somebody talks to you like that, that's when you walk away and say, thank you. Right now, everything's kind of flat, so it's not a big deal, but you really want to get some exposure to the trading account. Check out the CNBC app, set up your watch list. If you have some companies that you really, really, really love what they do, then send me some ticker symbols and I'll check them out for you. Because I can look at their balance sheet and say, yes, they're really good, or no, they're really not. You know, they're struggling here. The management's very greedy, you know, that type of thing. Anyway, I kind of run off at the mouth after a while, so feel free to.
That's okay. So I'll be the only reason why I can't open right now because I'm cooking, so I don't know if you see me running back and forth, but
Okay.
but thinkorswim.com, so that's the site that I go on and open that. And when is our next webinar? Because this is definitely helpful.
Yeah, I'm going to need Deanna's help on making this a little bit more seamless, but
Okay.
I think the whole idea was to just introduce you. I was kind of hoping we'd have 20 or 30 people who wanted to be millionaires, but so far there are only 3.
It will grow, trust me.
They don't want to. No millionaires in the house.
Yeah. Anyway, I know you can do this. It's so easy. And, you know, I'm going to teach you how to not trade with your emotions, and you're going to be fine. You're going to be fine.
Yeah, and thank you so much for offering this, and I'm sure Dagmar feels the same way as well.
Yeah.
So
Thank you so much, Tom.
Yeah. Oh, you're welcome. Dagmar, we're going to get that 35K back in no time.
Oh, cool. First, I need some money to start with.
Yeah. Well, we'll figure that out too.
Yeah.
But yeah, everything will be good, and you know, I feel really, really confident teaching people about what I've been doing. So just ask questions. Don't be afraid to ask. And if you don't know what questions, say, Tom, I've run out of questions, and just tell me what your concerns are. Because, you know, you don't want to get in that position where I don't even know what questions to ask, because that's where I was 20 years ago with my father-in-law, who was a millionaire, who invested in stocks. I didn't know what questions to ask, and he didn't know how to teach me. So that's not a good position to be in either. So we sat on the porch and walked back and forth in rockers and read the newspaper and chit-chatted, but I wish I knew what to ask. So if you don't ask, I will. How's that?
Yes.
Thank you.
Okay.
Thank you.
That is really much appreciated, Tom.
Okay, no worries. And you just have to promise me that whatever I teach you, you're going to teach to 5 others.
Yes, definitely.
And you have to keep them, make them the same promise.
Yes, definitely.
And that's how we're going to get to 1 billion millionaires in no time.
Cool.
Yes,
okay.
Awesome.
Yeah.
Awesome.
All right, and write out your check. Did you get your check? If you go to thesecret.tv, somewhere on there, there's a check. That's probably backwards, but
yes, we can
somewhere
see
there's a check from the universe that you can write to yourself.
That's awesome.
And you just tell the universe, this is what I want. So I've put down $1 billion on mine. And it's not all going to come to me. It's going to flow through me to you guys.
Yes.
Okay.
And to you, and to everybody.
And to everybody.
Yeah.
To make 1 billion millionaires.
1 billion millionaires. That's it.
Cool.
Okay.
Yeah.
All right. Well, have an amazing day. I'm going to go lie in the hammock for a little while.
Enjoy. Thanks.
Enjoy your day, Tom. Thank you so much.
Okay. Bye-bye.
Bye.
Bye,
Bye,
Rocky.
Dagmar. Have a good day. Bye-bye.
You too. Bye-bye.